Hey guys, welcome welcome to the Day Trader versus the midweek outlook for the week of February 25th. It's Wednesday night. We have had Nvidia earnings release. They beat on um, earnings per share and they beat on revenue and they had good guidance. So we'll probably have a continuation. Let's go ahead and switch over to the other screen and we can get started over here on screen two. And here we go. What's up, y'all? How y'all week been so far? How's your week been so far, everybody? Nobody? Nobody had a good week so far? No? No? Okay. For me, not a lot of trades this week. I only had like one trade on Tuesday, um, which was it was against the trend, but it was the trade that I saw at the moment during the time period that I
Okay.
was looking at the chart. Let me see who that is. Participants, somebody's got their mic on. Um okay, look like they got it. But yeah, didn't see a lot. And it hasn't been a lot of news. It's been a lot of headline news. Um We had Trump in State of the Union speech last night. He spoke a lot about um, basically current economy. He did introduce a couple things that may be of interest to us. He's aiming to limit the number of single family homes that institutions can buy. That was one big thing that came out of it. Another big thing was the introducing a somewhat of a 401k plan for families that don't federal workers that don't meet the requirement to actually get a 401k. This will be something where they have like similar to what the traditional 401ks are, and they do a max on it of $1,000. Uh, Upfront, great idea. I think this is one of the fewer times when I do think that that's a good idea. But in the long term, I think what it does is it just puts more money in the hands of large banks and institutions because now they got another pot of money they can borrow money from and trade somebody else's money. So, that's how I'm seeing it in the long run, but that's just my personal opinion. He did also talk about the overall tone of this was pretty politically uh tense, to say the least. There were a lot of back and forth between the Democrats and the Republicans in the at the address. He talked about his economic agenda. He talked about the claims that the falling inflation, lower mortgage rates and gas costs, and job growth in sectors like construction and manufacturing. But that doesn't really tell the whole story. So got to take that with a grain of salt. He framed it as he framed this is gonna be the turnaround of all ages. Um, he announced some he also reiterated that he's gonna be doing some more tax cuts with initiative aimed at reducing healthcare costs. Not a lot of details about it, but just that was something that was mentioned. Um, Still emphasizing that his strong stance on border patrol and ICE and immigration in general. Um, he addressed some of the issues about Iran and affirmed that that issue is something that's still pending, and he giving them a time to what he said pretty much was make a deal um, with what he's requested for them to do, which is to give up all um, nuclear creation capabilities and threaten to heighten escalations between the two. Also, with the Supreme Court ruling on the tariffs, they said that many of his tariffs that he's implied are illegal. Although the Supreme Court has ruled those tariffs illegal, he still used a backdoor way to pass an additional 15%, 10 to 15% globally across the board on all the countries. So he's actually breaking the law in a sense, but he's circumventing it some kind of way for now. But again, this is not my opinion. This is actually what's taking place. And then finally, like I said, there was some back and forth tension between Trump and the Democrats with uh with a couple of people getting actually kicked out of the State of the Union address. So that's kind of how this week has played off so far. Haven't had a lot of news, but we've had some overall growth on the upside for S&P, NAS, and the rest of the indices. Gold, gold's been pushing up, but it's kind of ranging for the most part. A lot of the brokers uh, a lot of the prop firm brokers have actually limited access to trade any of the metals right now and natural gas. So if you're trying to trade it, I know Apex mentioned that they were going to halt all trading on that, and then I think that Top Step has done the same. Yep, that's why you couldn't trade it today, Shanika. They said that they just want to they've a lot of one broker in particular, Apex, has had some issues with people trading these big swings on gold, platinum, and silver in particular. They put out an email a couple days ago and they referenced one trader in particular. I think his name is Brian Stonk or something like that. I'm not sure. But what he was doing was he was basically trading 300K accounts and the drawdown max drawdown on those accounts are $7,500. He was basically YOLOing those accounts where he would take each trade he take, he would max out the risk, right? So he was risking 7,500 on the trade and then just making huge profits, right? And what he would do is if he blew the account, he would just immediately go and buy another one. That was one of the things he was doing wrong. And then in another case, um, if the price was gapping, right? The price was gapping up or down or whatever, the expectation was for us to come back into the gap. And what they would do was they would put large positions on those gap trades and just hold those positions until the trade came back into the gap. And then they would either be up really big or they would be down really big. But and eventually the account would just get blown and then they would just buy another account. This was done, I think, 62 to 69 times by this one person, and that really didn't sit well with them. So they put out that message. I don't know all the details. I could be describing it somewhat wrong. Um, Basically, you're right. So the dude can't trade. That's right. That's exactly what it is. He can't trade. So, and to make matters worse, he was one of the people that they were using as an affiliate too. So like he was blowing up these accounts and just blowing them up and just over and over, not really trading for real, but it is what it is. As far as the news today, not a lot of news. Um, Not a lot of news on today. We did have a couple things. We had FOMC speaker today, and we had oil inventories come out. Oil inventories came out with an estimated forecast of 1.8 mil. Crude oil inventories came back at 16.0 mil, which means that when you have an overly surplus, that means they're going to have to keep prices lower on oil. So that's kind of the reason why this number's coming in red. You want to see this at or around that. That way you can see advanced prices on oil. But that's kind of the logic behind this. Then going into let's look at going into Thursday, we got unemployment claims on Thursday. That's our only red folder on Thursday. Yeah, we talked about it. Oh yeah, that we weren't on the call. Y'all weren't on the call, but yeah, Nvidia came out. I think me and Anna were just talking about this. Nvidia came out. They beat earnings. They had a estimated $1.52 was the estimate. They beat it. I think it was 164. So they beat that by 12 cents. And then on the revenue side, they had an estimated of 66 billion, and I think they brought in 68.1 billion with positive guidance as well. So that's the combination that you want to have. You want to have earnings beat, revenue beat, and positive guidance. And that should be our catalyst for us to continue higher probably for the rest of the week, even if we do get a retracement day or something along those lines. I again personally, my personal feelings about that is I think they front ran the move this week, knowing that the expectation was for Nvidia to probably report beats on their shares and let that drive price up. But we also had AMD beat. They did a deal with Facebook, so that caused that company to push up. And then overall, the big noise that's been in the market is software providers. Initially, where software providers that they like SaaS providers, so software as a service, a lot of those companies are being, kind of outdated because of AI and the advancements in AI. It's replacing a lot of that stuff. So they've been taking the beat down lately. I think overall that sector, which is they have their own sector, um, and that sector has been down. Not sector, but they have their own. They have their own sector. Let's just say that they have their own sector, and that's been down 25% on the year. So, um, and they actually start to see gains this week for the first time. Um, so that's kind of the overall story for this week. The Like I said, Thursday we have unemployment. We have one Fed member speaking. We have Fed member Bowen speaking, and then Friday we got core PPI. Core PPI at 8:30. So overall, that's pretty much going to round out our news for the week. So we could have some news breakouts in relation to the unemployment and the PPI. So that is still definitely a possibility. But again, I think the drivers this week will take us up higher. Um, we still have a couple of earnings to keep an eye on. Um, Earnings for companies in relation to Bitcoin miners and Bitcoin company. We still got Warner Brothers coming out this week before the market open. We got Dell, Sound, um, Marathon, that which is those companies are all crypto related companies. We got Celsius coming out. Still, all of these companies are gonna probably go in the direction uh, of your crypto market right now. So, and then Friday looks pretty clean. Nothing big on Friday as far as earnings go that we really need to keep an eye out on. Couple things, maybe you want to look out for. Energy Fuels, they're a fuel company. if you're a oil trader, but nothing too serious, right? Uh, I did want to talk about one other thing. One setup that I do trade a lot that I haven't traded in a while. Um, Let me see if I can open up my Airtable on here. This one I haven't traded in a while, but I'm seeing it come back into play, and I would like for you guys to consider it too before I go into the charts. Let me see if I can get into here. Let's try to jump in here. Um, Let me pull it off screen so I can type in the password since this is on the wifey's computer. Oh, let's see. And it's that three drive pattern setup. It's happened a couple times, and it's one that I would like for y'all to look into if you can. Just add it to the arsenal. Nothing to like really dabble in too hard, but just one to look at. Let's see. Um, Almost there. Hang on. Okay. Great. So it looks like I'm in. Okay. Okay. So this particular setup is called three drive pattern setup. And you'll see it when in particular, there's a couple of things you want to look at, right? And in this case, you want to see that you have three swing highs or three swing lows, right? You're really looking for the first two. And then once you get the first two, so this will be one, this will be two, you're gonna throw your fibs on that last swing. Your last swing should give you a measured move that puts you around the 127 or the 114 as an entry for your for whatever direction you're trading in. Either you're basically measuring a swing high or a swing low sweep. And once you get that range, this gives you like a calculated range for you to expect for a price to push up above a high and sweep the high and then reject, or above a low or below a low, sweep the low and then reject back up to the upside. It's one that you see it like once or twice in the week, right? And when you see it, it's one that gives you some a very, 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 very good risk reward ratio. This was Monday, and this was why I really didn't I was mad that I missed this one on Monday because Monday would have given me so much money, but it's okay. Um and there were a couple things on this that we also saw. I could show you a couple of examples of this, right? So this was Monday's trade, which I don't have it here, but Monday gapped open. So we already knew we would likely come back into the gap over here, which I don't have drawn on here, but there's a gap over here. And if we were to extend it out, if we were to extend it out, that would encompass pretty much this same area, the 127 and the 114, right? Your first high that got swept was right here. This is your second high. And then your fibs are going to measure the range from this high and this low, right? Your entry is either the 114 or the 127. Which you an easy way to approach this is once you get into the 114 and the 127, you want to drop down to like the 1 minute or 5 minute chart and then get a lower time frame confirmation. Your stop loss is going to be the 161. Um, and the 161 is your primary stop loss. If you just want to go dumb, which some, and I won't call it dumb, but if you think that this is still going to go, your tilt level, when you know you just doing everything wrong, is the 200, right? So that's worst case scenario. So you kind of use these three levels as your stop loss as you see fit. So other things to consider is sometimes in sometimes if it's a very dramatic move, you'll also see that this stop loss level will get used as an entry as well. So you just got to kind of pay attention. Like if you don't get the entry at the 127 or the 114 area, and you still think that it's like a reason for it to drop, maybe you got a negative news catalyst and you know the market probably should be dropping and it's not just opinionated, right? You can also use these as entries as well. And then you would just take this same sales setup, use the 161, 175 as your entry, and then use the 200 as a stop loss. The next thing you'll consider is once you're in the trade, once I'm usually at the 100, once I've reached back to the 100, my stop loss that was originally up here moves to the high that was made, right? At the wherever my entry point. So whatever high is made at that point, I'm usually moving that stop loss from all the way up here to here. That lowers my risk, right? That's once I'm at the 100. Once I'm at the 1, which is the 786, you are typically going to be somewhere within the 1-to-1 range at that point. It's actually in most cases a little over 1-to-1 at that point. And when I'm taking that, at that point, I'm moving to break even, right? I'm just moving to break even at that point because at that point, you should already be up, a little over your risk. Then once you're at the 50%, you're just above 2-to-1. Once you're at 25%, you're pretty much at 3-to-1. And then the zero is your primary target, right? Overall, this is your primary target. And this puts you pretty much up at a 4-to-1 at this point. However, if there's liquidity already built, right? If there's liquidity, like if you are gunning for liquidity, there is likely to be a higher time frame point for a target. And in this case, this would have been one. Oops. This would have been one right here. And then this would have been one over here. In a lot of cases, even though your primary goal is the zero, you will likely see the negative 100 be the target or higher time frame points of interest where right here we got equal lows and we got a swing low right here that end up being the target that got taken out right here. So as you can see, this really ended up being like almost a 10-to-1, 12-to-1. I don't know, probably 12-to-1 on this. Here's another example, and then I'll show you one on the charts as well. Um, this was one, this was ES, same situation. No, in Q, that was Dow. This was in Q. So you had your first swing out high right here. Your second swing, you wouldn't you some people might count this as a second swing, but I wouldn't so much do that. But that's my first swing. This would be my second swing. In this case, I think I counted this as the swing, but you're measuring from here to here. So this is your range right here. You're you sweeping this high, these equal highs. You're coming into an you also have the additional, I'm coming into a order block right here. And at the same time, you have price pushing up to your 127 and 114 levels. I actually took this trade, but I took it lower than I probably should have because I wasn't paying attention for this. And that's why I had to. This is like one of my trading strategies that I use, but I don't always see it because I'm so locked in on the inverted fair value gap setup. That's my favorite setup, honestly. And I'm always looking for that setup more than anything. But sometimes you don't get what you are looking for. Wale, you got a hand, bro?
So what is this OTE or because I was always from ICT,
No,
the 100 is supposed to be at the top.
no,
And
this is a called three drive pattern strategy. And it's basically another way to consider trading liquidity sweeps from either high or lows.
mm,
And is one that has been in play of late, which is the reason why I'm talking about it, because it's been in play a lot lately. Seen it a couple of times. And like I said, I really like this strategy because it's got a very high risk reward. In this case, you coming into this area, the 127, 114, your stop loss would have been the 161. You would have hit 100 here. You move your stop loss down to above this high. Once you get to the 100 level, your 2 to 1. Your 1 to 1 is the 786. Your 2 to 1 is the 50%. Your 3 to 1 uh is the 25%. Your primary target is the zero. You would have hit that. Then you had your higher time frame areas. You had this swing low and you had this swing low that ended up getting targeted. So even if you don't, even though this is the primary, you would have had the full range of this trade taken out. This again, another like 10 to 1 setup. Here's another example. This is for a buy. In this case, this buy setup, we were one of the main things you want to see is you want to see a very good sign is you have something bullish below you and something bearish above you if you're looking at this setup. In this case, this is like a daily price gap, this whole blue shaded area, right? So, and then you have liquidity right above it. That's a very, very good sign that this is going to play out this way. When you have price ranging above a higher time frame point of interest, you have lower time frame liquidity build up, and then you see price shoot down into the area and then bounce up. That's basically what is really, really looking for, right? So in this case, this is a move to the downside. We had our original low high right here. This is our first swing low right here. Then we had another high right here, right? This was a lower time frame one. So this was kind of looking at just this leg right here, right? This used like the 5 minute move. So, right. So we had a low, a high, a low, a lower low, a lower low. I'm sorry, a lower high, and then another low, right? And in this case, we weren't using the overall move, which would have been this. This was using just this swing right here to the downside, right? With the understanding that I'm coming into this area, right? So it would have been 1, 2, 3. Okay. Measuring the move from here to here. And then your swing to the downside puts you with an entry right around here or here. This actually got you close to the stop loss in this case, right here, because that's your one. This is your 114. That's your 127. This is your 168. And we would have almost wicked that, right? That's okay though. Because in this case, it came down near it. Again, that's why I say, even though we come down to the level, you go to the 1 minute chart to confirm, just to make sure that that you time it up in the right way. Use VIX to help you get the timing as well. And then you take the entry. So it's not just coming to these levels, it's also getting confirmation as well. Because in this case, you probably could have actually waited until we got at least around here. You probably could have waited for that until we got around that when we actually came into the bullish point of interest before you actually start looking for your entry. But in this case, if you got it around here or you got it around here, once you're at the 100, which would have been here, oops. Once you're at 100, you know, regardless of where you got in at, the stop loss doesn't have to be down here anymore. You can move, I'm sorry. Well, yeah, in this case, you can move your stop loss up, right? This is 1 to 1 right here at this point. This is 2 to 1. So you would have got your 1 to 1, you would have got your 2 to 1, you would have got 3 to 1 right here. And eventually, if you were willing to hold in this trade, you would have got 3 to 1. I'm sorry, the 4 to 1. And then you would have got some of the higher time frame targets as well. But this chop probably would have made me get out at one of these levels near this high right here. So one more example. I think I got a couple more examples. Um, I think this was that same. Nope, this was another buy. This was from 23rd, which was actually Tuesday. Um, and again, same situation using the lower time frame move to the downside, this swing to this low. This is it's an inverted fair value gap right here. Two, this is a daily or weekly opening gap, right? This is your swing. 1, 2, 3. You have two options here. You can measure this swing right here, and it'll give you the same entry. You can measure this swing, or you can measure this from here, from this low to this high. You got two options. And I'll show you again on the chart where you can measure this high and this low, or you can measure this high and this low. But in this case, measuring this high and this low gives you the entry at the 114 and or entry at the 127. Your stop loss down here. You can see the entry on that would have been 648 as the entry. Stop loss would have been 633, right around 15 points on the stop loss. Um, but that's still not bad if you're not risking over leveraging. Then once we get to our 100, which is right here, we know we can move our stop below this low now. And then here we know we're 1 to 1. We take out this high. This is roughly around 50%. So that's our 2-to-1 level. We actually tap the 2-to-1 level right here. Then we come to get our 3-to-1. Eventually we get our 0, and that's our 4-to-1. We eventually get 5-to-1 pretty much. And eventually, even though we swung all the way back down for this, we get our 6-to-1 up here. And we hit those higher time frame targets and take out and set liquidity. I think I got one more example. Let me just take a look, and then I'll just show it to you on the chart real quick. No, this is VIX confirming the entry. Yep, this is just VIX confirming. So, I wanted to just show y'all that. So, let me pull up my homework chart. I think I got it open. Let's look at, I don't want to mess with that one. Let's look at it over here. Couple ways we can look at it. And this happened on Tuesday, which this was the one from Monday, which I'll draw up on here. This is Monday. We know we got this gap. And then you can already kind of see it. You had the low set right here. So we already know if we got this kind of setup, this is our main target, right? Then you had a swing high over here. You had your next high over here. And then you already know that there was a couple things in this as well. On the 4 hour, just to let you, there's a fair value gap right here. So you also know you have a fair value gap right above you coming into this area. And you already know you have a weekly opening gap. We already sold off overnight, and we were coming off of bad news. So this kind of leads you into the sell direction ahead of time. So you already got your bias that this could possibly happen. I think a couple people even sold around this area or tried to sell right here as well. But this helped you kind of see that. So now my fibs, I'm throwing them on this level and this level right here. 3 drive pattern sell setup. And I'll just extend it out. Again, this one almost hit stop loss, but that's why the 1 minute gives you the actual entry. So we'll go ahead and see what that looked like on the 1 minute. So once you get at or around that negative, that 27 and 114 level, that's when you're looking for your confirmation for the entry. You would have had high, higher high, higher high. This would have been gave you a small fair value gap. You could have used this. You could have used a lot of entry setups to get in above this. But overall, you understand that I'm near these levels and I'm looking for my entry. There's a lot of entry strategies that we could have considered right here. I think we even could have even looked at the 1 minute, 3 minute chart on this. 5 minute. Yeah. We could have traded once we took back below this area. We could have took the sell from there, reused this as the high, as a stop loss. 1 minute also showed us the inverted fair value gap setup that we could have took. Um, right above near the stop loss. And then we could have sold below this. Could have used this little small fair value gap, so sell below that for the entry here. with the stop loss above. And just like mentioned before, um, oops, cancel. Just like we mentioned before, once you're in the trade, you get to 100, stop loss comes down. This case 1 to 1, you're at break even depending on where you got in. Let's get out of here. Depending on where you got in, you're at break even at 1 to 1 at the 786. You're at 2 to 1, just above 2 to 1 here. And let me give you the fib settings too. For the buy, for the sell is these are my fib settings. And I'll let you get a screenshot of that. Let me put one in the chat too. Put it in the chat just in case somebody can't get to it. I'm not gonna post this session on YouTube either, so at least not publicly. So if you actually want this session, um, just send me a message. I am recording it though, so but I'm not gonna post this online. I am gonna gatekeep this. Not even gonna lie, but and then for the buy setup, the only thing different for the buy is oh, let me see. That was the sell. The only thing different for the buy setup is you still have the same numbers and everything. It's just I just got it set on reverse, right? So my zero would go to the high or the low in the direction of where I'm trying to do. If I'm trying to buy my zero, if I'm trying to buy my zero is at the top and my 100 is at the bottom. If I'm trying to sell, my zero is at the bottom and my 100 is at the top. And then all the numbers and the wording that's on that stuff that I just wrote in myself. So, which you can all, hover over the tech, hover over the fib to add like titles on there. And that's just kind of something that I did myself if you want to actually add those in. I'll show you one more example of this. And like I said, it's happening. It's kind of like you get one or two of these in a week, right? Um, and when you get them though, it's just like really, 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 really good moves. I think it was on NASDAQ. Um, let's open it anyway. NASDAQ, I think it was on NASDAQ. Yeah, this one's it right here. This was the one on NASDAQ right here. And then I'll show you too, like the two ways you can approach it, right? So we had this, the example I gave y'all before was we use this high and this low right here. But can also use this low, this high, and this low as well. That's the only reason, like this is actually the second drive right here. But you'll see, like if you were to try to use that in some cases, you would have got stopped out for no reason. That's why sometimes if the push doesn't make a true higher high, lower high, in this case, we didn't make a true lower high, right? You would have been even a little better off using maybe this high and then this little low right here because we kind of got a lower low there. And then you would have been able to get the entry off of this swing right here from here to here. So you got a couple of options with this, right? You want to see that there's in between this leg, there should have been a lower high. And I guess you can count this as a lower high. So you could have used this swing right here from this candle high to this candle low, or you could have used this candle high and this candle low right here. The better one is actually this high to this low. Actually, that's actually the better one. Because if you were to actually draw it out, that is kind of a better example of the swing. So this would have been your one. I'm sorry, let me draw it a little better. This would have been your 0 to 1 move. Your that would have been your one. This would have been two. And then this little swing high right here would have been the move back up. And then that's the three to give you what you need to get in right around here or right here. And again, it's the same process you are taking a look at after that, where is my 127 is my entry, my 114 is my other entry that I could take. Then when we go down to the 1 minute or the 5 minute, just like I said before, once we get down to 1 minute or the 5 minute, you actually time up your entry, right? So this on the 1 minute chart. Um, you could have used this lower low, lower low, lower low, and then use this candle for your entry. And in this case, you really could have done something along the lines of this. Let me get my favorites out. Oops. Okay. Could have actually, if you were going to use this, probably could have even used the stop loss, like not even all the way down here, but instead like maybe here or using the body of that candle like to get an even better stop loss. And you would have just taken the same approach, right? You know, here, if you're looking at the original stop loss, it would have been here. And that's kind of the way you want to gauge it. A 50-point stop loss on NQ is not that bad, depending on your size. If you're just using like 5 micro contracts, that's not a bad stop loss at all. Because with this, your risk reward is so high, even using like a 5 will get you $1,000 on the trade once you're at 2 to 1 or 3 to 1, that area. Because it's just really, really good risk to reward. Was that Anna?
No, no, sorry, sorry.
Okay. Um, and then as you can see, same example, right? Let's say we use this counter to get in. We get to 100. That's our move to stop loss. Instead of using this low as a stop loss, maybe you want to put it right here. Like I said, that lowers your risk already. Then once you get here, you're at pretty much 1 to 1 from the original. Um, for the original trade, you're actually 2 to 1 in this case from the original stop loss. Then right here, there's your actual 2 to 1, but you're already up 160 points on this. Here's 3 to 1. Here's 4 to 1. Here's 5 to 1 up here, roughly, and so on, right? Overall, if you look at the actual trade, though, this right now is looking at the actual trade. This is 5 to 1 right now. Five, almost 6 to 1 when you get by the time you get up here. Um, then you look at this is about 6 to 1 right here, 6.5 to 1. When you look at the adjusted stop loss, where you actually got in based off of, and your adjusted stop loss, you actually looking at somewhere closer to like 12 to 1 on this. Yep. And even if you just get the primary target, even if you get the primary target, that's like 8 to 1 based off of where you adjusted your stop loss from. So it's very, very, very clutch. But you got to have all of the everything got to you got to have your bias lined up with higher time frame point of interest, right? And then there needs to be liquidity involved that gets sweep. So the key things are first thing, have your bias. That's got to be the case, right? You got to go in with a decent bias, and it's got to be in relationship to whatever the market is doing prior to your trade being set up. Then the next thing is you want to have a bullish point of interest if you're looking for the buy below a level of liquidity. You want to have a bearish point of interest above levels of liquidity that will likely get swept if price trades above it, right? So in our case, for the buy, I'm sorry, for the sell, we had a 4 hour bearish fair value gap. We already had a bearish bias, and we also had a bearish, we had a gap to the downside on the open, which is typically bearish. Then we had liquidity above these highs right here for this sell. We pushed down, we swept that liquidity, traded into the weekly opening gap, and then we sold off. The opposite for the buy, right? There's I think there was an inverted fair value gap or a fair value gap over here that was bullish. Plus, we're trading near a range low. There's another fair value gap right here on this particular time frame. There's probably something on the higher time frame as well. Then we also had liquidity that had built up in our small range for the night. We swept it, traded down into that range, held and pushed up. And then we hit our targets, right? So that's what that looked like. This one wasn't clean on Tuesday. Tuesday was a little market manipulation because Tuesday wasn't a clear move in either direction. We had some horrible looking wicks um, throughout all the way up to the 4 hour. So I probably wouldn't have taken it on Tuesday, even though it did present itself. I wouldn't have taken it. I actually took one, but on the sale, I took it to the downside. And again, it was in the wrong direction, but I still end up making 3 to 1 on the trade almost. So I'm not even mad that I didn't um, win that trade because I still got 3 to 1. So I think I took this whole move from right around here down to here, which is 100 points on NQ. Yep, it was right at 100 and something points. So uh that's why. But if I really was, I took the sale because I was considering the the previous bias where we had already been selling off, and we actually got some bad news on this day, but I think we came in with consumer confidence beat, and I think that may have been a reason for this to go up. I know I think Wale told me he took the buy uh on this leg up. So basically, what I sold to, he was buying that, which that was a good trade. That was a great trade. But I was also looking at the buy. I just wanted to stick with my bias before I try to switch it up. So that's kind of the logic behind it. I started to buy this too, but I had already made my goal and I was done for the day. So um does that help? Is that something y'all think y'all will look at going forward? Let me know what you think.
Yeah, so I remember I used to do that. If you remember, we both used to do that, right?
Yeah. Yeah.
But I think I forgot that. But same thing happened on S&P on same day also, right?
Mm-hmm. Mm-hmm.
Yeah, I
Yeah.
took that. I took that same setup on S&P.
Oh,
Hmm.
nice.
Yeah.
Yeah, so I will go to that S&P.
S&P.
Yeah, like MES one.
Yeah. You looking at Tuesday,
No, Friday,
Friday,
28th. Yeah.
Friday. Yep. Yeah.
So on 5 minute.
Yep. Yep. On the 5 minute.
Yeah, this is same thing, right?
Yep. It's the same. Yep. And that's why I was saying, like, you can use, you want to see a lower high made within a range, right?
Mm-hmm.
And then you want to see the main kind of things you want to look out for is you want to see trend, like I said, you got liquidity over here.
Mm-hmm. Yeah,
You have bullish. Let me go to the 1 hour right quick. So that was Tuesday. That was Friday. I'm sorry.
right.
So here is your higher time frame consideration. You got a order block, right?
Mm-hmm.
This on the 1 hour. So that's one thing, bullish order block. Then you got B, inverted fair value gap right here. That's two bullish point of interest, right?
Yeah.
And then okay, to the Friday it was here. You got liquidity above the bullish point of interest right here. So that's your three combinations, right? Here's your liquidity. That's the three things you want, right? You want liquidity sitting above bullish point of interest. In this case, you got two. It's overlapping. And if you want a third one, if you go to the 15-minute chart in this same area, you got a third one. There's a bullish fair value gap that's right here too. So that's another thing you can throw in there. Bullish fair value gap as well. Let's just say on the 1 hour, I just want to make sure I can see it. So you got three things, right?
Yeah.
You got two areas of liquidity. You got you got all of this liquidity right here. This is sitting right around, right at or above price at the time, right?
Mm-hmm.
You got this. You got this area of liquidity. You got one, two, three bullish points of interest.
Mm-hmm.
And then you got price driving down into where we see we could be coming into this bullish point of entry. Your bias needs to be, is there a reason for this to push to the upside, right? So you can't just go into it like structurally, this is a great setup, but you also got to have that last piece. Like, is there a reason for this to buy for this day? So let's look at Friday and just to double tap, see if we had any catalyst that went into this as well. Friday,
20.
the 20th. Thanks. You always checking me, man. Always checking me, bro. All right. Okay. So here's our bullish catalyst. Like, all right. So here's everything in all in one level, right? We had somewhat of a bias that was neutral probably going into Friday because we had actually been ranging, right? But at 8:30 in the morning, core PCE beat, right? Core PCE beat and GDP beat. So now that should be like a light bulb, a shift. We even got home sales beat, right? On we got a lot of positive news on that day. So
Mm-hmm.
our setup 8:30 is around here. We initially pushed bearish, right? But we see hey, all right, we got a possibility that everything turned bullish on the news. So we actually should probably be buying in this case, right? So now we thinking sell to buy, right? Like I said, you either measure the high here, the low here, that gives you the entry right here, or you looking at the oops. You looking at the low here and the high being here, and you're getting the same trade. I like in this case, just for this particular case, this is probably the better entry setup right here, but you wouldn't have been wrong if you had to use this, put the fibs this way from this low right here, and then just use the high up here. You wouldn't have been wrong for it.
Okay.
Because
No.
sometimes it's not as clean as this looks right here, because you still had one liquidity break. So this is 1, 2, 3. That's your drive right there. Where you got one. This is technically a lower time frame swing high. So that's why this is a 2. Well, that's why this is that move. And you want it to look something like this, where you have your 0 move here. This would have been 2. Your 3 is the sweep, right? That's the 1 sweep, the 2 sweep here, and then this is your 3rd sweep right here, where you would get your actual entry from right here. So that's kind of why I say you could use this or you can use this, right? If we had to use it the other swing, it would have looked like
This
this.
is like five drive pattern, right?
Pretty much, pretty much, pretty much. Yep.
Okay, so
In
one.
this case, you got 1, 2. This is a little swing right here, that little high, and then that's your 3. That's why you can use this other one too, because you actually got a swing right here. So you got the high to this low as your 1. Your retracement 1 to 2 is here. Your 2 to 3 takes you down here. And then if we go to like the 5-minute, that's where that other swing leg come into play right here, where you can see it right here. So
So like your entry is on 3, right?
pretty much. No, your entry is on the 5.
5. Okay.
Mm-hmm.
So
The entry is on
5,
the
like this is
so base.
according to your chart, this is 48 right?
Yeah,
Yeah.
6848.75 or 6854.25.
Yeah.
And that's your entry. And so this is using this leg, the 1, measuring the 1 to the 0. And then what I just drew up is measuring the 2, 2, 3 leg, this is the leg you're supposed to use, the 2 or the 2 to the 3. And that's the 3 right here. And that would have gave you the entry too. You would have got the entry from the 114 on this. I think so. Let me see. I think I drew it up a little wrong. Yeah, I did. Because I didn't see the high here.
Because I put that on 6880 high and low
Right
is
here.
60, yes. Yeah.
You use
Upper,
this.
yeah, this upper on this is on 5-minute. So 6880. Yeah, exactly this one.
You put it right here. Yeah.
Yeah.
Yep. That's why I told you you got you can either use this whole swing because this on the 5 minute, this is a swing high.
Mm-hmm.
But if you go to technically, this is actually the swing high right, the lower high right here that you want to use.
Mm-hmm.
Because this that's a gray area, right? You either can use this or this, but I would have probably used this right here because this one actually took out a high. I'll say that.
Okay.
This
Got it.
one took a high and made a high. So
Mm-hmm.
that's your lower high right here. So I guess moving forward, a rule of thumb would be consider the lower high or the higher low um, if it takes out a high, which this
Okay.
took out a short-term high. And then
Mm-hmm.
you would have been setting up right here. This would have gave you the
So
one
according to
for
this is your like you put your fib on 0 to 1, right? And then it moved 2 to 3. Sorry, 0 to 1, 1 to 2, 2 to 3. 3 is your entry, right?
Mhm.
Okay.
In this case, is the 2 to 3 is the 2 to 3.
No. Yeah.
So your one look like this,
Okay.
0 to 1 is
Okay.
here,
Okay.
1 to 2 is here,
Mm-hmm.
three, 2 to 3 is here, 3 to 4 is here, and then here's 5, your entry.
Okay. Got it. Means main fib is should be on 2 to 3. Thing is that,
Mm-hmm.
right?
Mm-hmm.
And the entry
Measuring
should
the
be
two
on
to three
5.
lead. Yep.
Exactly.
Yep.
Mhm.
Yep. In the same way in the sales setup, right? The sales setup that like when we look at Monday, I'm sorry. Monday worked the same way, right?
Mhm.
Monday would have worked the same exact way, but in the opposite direction. And you're looking at 4 hour order block, I mean fair value gap, which is here from the 4 hour, right? And then just to add in some other considerations, you would have had your lower quadrant, 75 level, lower quadrant level here, right? Then going down to the lower time frame on the 1 hour, you can see the gap right here. You can see the gap. You see on let me go to the 5 minute chart. In this case, you already know we got a swing high right here. So in this case, it looked like this 0, 1, 2, 3, 2, 3, 3, 4, 5. Right.
Yeah.
And then you measuring here to here. This one a little sloppy, but it's still good. I think there we go. Our sales setup right here. This one came near, like I said, this one came near the stop loss. That's why I say use your 1 minute to confirm the entry. Your 114 is here, your 27 is here. You sitting most of the price held inside of this gap though. So that's an additional confirmation. And then you're also in this lower quadrant level of this 4 hour fair value gap. So you got that to add on to. Then you go to the 1 minute, go to the 1 minute, and you come down into the actual trade. There's your high. It actually even repeated itself on the lower time frame. Like on some low key stuff, like if you were to look at this like on probably the 15-second chart, you could actually take this same approach to get this same swing right here on the 15-second chart, right? So let me delete this, and I just want to show it to you real quick. This same thing, if I can get to it, I don't know if it's gonna go that far. On the 15-second chart. So Monday on the 15-second. Yep. Now watch this. I'm gonna show you the same exact situation. All right. So this is basically the move up right here, right? Here to here. That's your 0-1. This is your 1-2. This is your 2-3. This is your 4-3-4. This is your 5. Now throw the fibs on this. Measure the 2-3 leg right here, right here. We're gonna look for our sell. Boom. Same exact thing on the lower time frame. On the 15-second chart, right? Your entry is at the 114. You don't, in this case, you could have even used the 100 as an entry too, but in this case, if you don't feel confident about it, right, you can start using the field levels, right? If I can't get in at the 114 or the 127 because I don't feel comfortable, let me just take the break and retest of this level right here, right? Or here's a inverted fair value gap, right? Once we get below that, I could take it from this 50% because this is on the 15-second. This is in the higher time frame, but you still would have been good, right? And even with this, you still getting a lot of points out of this move, right? Even on the 15-second chart. Because again, entries up here, let's say you do get the 114 entry, stop loss is 4 points, 5 points, and then primary target is basically this low. You're looking at 220 points. Oh, 23 points on this. And you're looking at a trade that is 4-1 risk, 4.5, 4.6 risk reward on the trade that you caught. And then when you look to the higher time frame, the bigger picture, you also know that that's only the lower part of the move, right? That's not even the real move, right? Because the real move is 2-3 here, the 2-3 here. So now you got the original move that you got in, and now you know your entry is a good entry all the way up here. And then you know you actually can be looking for your setup to come all the way down here to take this low as a primary target. And now you go from 200 points to 400, 23 points to 44 points.
Yeah,
So
that day I was looking for this sale, but not with this method, but again, or because of that was new week opening app. So I was assuming it will go there and reject
yeah,
that. But same time, like in NAS, it didn't happen, right? So
it
I
happened on
waited.
the ass too.
No, that was not in new week opening app. It didn't hit that. I was waiting to
Oh
hit
no, it didn't
there
hit the new week
also.
open. Yeah.
Yeah.
Uh,
So,
actually it did. It hit it, but grazed it. Um,
no,
it grazed it. Let me go to it. I think it
because I
grazed
was
it. Didn't it?
waiting, I thought because Nash, if Nash will go up, then MES will go also up, right? So I
Yeah, it
thought,
hit
well,
it.
yeah, I can lose that.
Yep, it hit it right here. But it barely tapped into it though.
Like
So
on 5 minute, it didn't like means if I
see.
see, Yeah, so its opening is
Yeah, you hit it on the button.
25,078, right? And its high is 982.
Yeah. Either way, setup
Yeah,
was
it
there.
was about to. Yeah, it was about to. I was waiting like then that will be good setup to enter, but
Yeah.
that's why I means I missed that rate.
Yeah, that one was a decent
Mm.
setup.
Mm.
So I want y'all to put this in your back pocket. That's why I started with this on the session and not just going straight into the charts. We know how to look at the charts at this point, so that's kind of why I wanted to just go into that first. So now we'll look at dollar first. And like I said, I'm recording this, but I'm not giving this to everybody. This is for y'all people that I know gonna like actually use this probably. And it is happening often lately. So that's why I wanted y'all to look at it. And I'm seeing it. Once you see it, you're just gonna be like, dang, man, like I need to use this more often. Like, right? Look at this. Right? This ain't happen all the way, but there's the setup right there though. It's right here. There's your 127 entry over here. Even though we don't get the whole move down, like if we taking this, um, say we take it at the 27, right? This our overall target right here. We would have got it in right here, somewhere over here. Then, if we drop down to our 1 minute chart, maybe we get in a little higher on this. But at this point, at this point right here, even if you just get down to here where we got this low, let me put this is a sell. This is 1-to-1 right here, just past 1-to-1. This is just past 2-to-1. And even though I got 2-to-1 on here, right, it's actually more than 2-to-1, because it's like give or take a couple of points. Then we almost get 3-to-1 on this trade. So even though we don't hit the target, you get a high risk reward probability on this trade, right? So that's why I like I got you. I want us to start looking for it with context, right? So it ain't just it's with context. And even in this case, there's context behind this, right? This move right here is trading into a daily fair value gap. This is a daily fair value gap. This 98 level is the upper quadrant of that daily fair value gap. So we know we're going to get a sell-off at either the middle, at the low, middle, or high, or one of these upper quadrants or lower quadrant levels, which this was a sell-off near the upper quadrant level. That's in line with a potential area for us to sell off from. I don't know what the bias was ahead of that, but there's swing high, and then we make our last high, then we sell off. We don't hit the overall target, but we just range, right? Even this, right? Over here. Look at it again. 1, 2, 3. This probably don't give it to you clean though. I think you would have missed it on this if you're looking at this big old move right here. But I think you miss it on this though, because yeah, you would have missed it on this, but you would have almost got it because it came up there near it and it sold off just before it. So that probably means that you can consider this equal highs. And that's another last point, right? Even though we got a 3-4 swing right here, this high and this high are relatively equal. So this is a high that I would not look at as a separate high. I would probably consider these both the three. And that'll be something you'll see too. And you'll kind of know like this probably is not the high right here. And we'll just use this as an equal high, meaning we have a chance to come down lower to go higher up and sell off again. So that's just something to look at. And I'm glad this got pointed out because sometimes this swing isn't completely done yet, right? So this swing would be the one. This would be the two, right? And you would want this to be the three, but this is pretty much a relatively equal high. So this is actually probably better to use as the three instead of using that. And then now we're making the four. And then we would want to make the five somewhere around here if this is going to go up, right? So that's just one last piece to add, right? But now, okay, so now we're looking at the charts, right? This dollar, we already starting to sell off overnight, swept liquidity. If we're going to hold up, there is a 1 hour order block right here, and then this huge order block right here. So that's why I'm thinking if we do sell off, we likely hold around this area. There's also a little small fair value gap right here. That's why I'm looking at the 0 1 projection down here for us to come down to. And then if we don't continue lower on this 0 to 1 move, we get a 1 2 bounce once we get near the low of this fair value gap. At this point, now that we're inside of this fair value gap, if it's going to go higher, it's going to want to try to use this low as support to go higher. And then you can also consider this new week opening gap, this kind of area being held as well. So that's the logic behind that. If we get our 2 3 move to the downside, we come down and at least try to bounce at the monthly and maybe even sweeping this liquidity over here. So that's kind of why we would want to project the 2 3 down near the monthly. And at worst case scenario, we come down to the inverted fair value gap. That's actually where I'm looking at the 5 to come through. Only because we don't have a lot of news or whatnot that'll drive us any lower. Then 3 4, there should be a fair value gap inside of this 2 3 swing. So the 3 4, if it's gonna hold, should make the high around the low of this fair value gap. It's still bearish right now, so the low should give us room to sell off again. And then really the 4 5 could probably take us right around this upper quadrant of this inverted fair value gap, which happens to be right around 96.9097. I don't know the exact numbers, but it is right around here. Just splitting this area in half right here. So probably right around here, 96.9000 area, or even sweeping this low, worst case scenario. If we get a bounce, it's probably going to happen near the monthly opening price. So R3-4 could be the bounce to push us higher and push us back inside of the fair value gap to hold. So that's what I'm looking at from the downside perspective. From an upside perspective, if we do, we're selling off now, but if we start getting back above this open and weekly opening price right here, that puts us back inside of this new week opening gap. And high probability is we come, and if we do push back up, we probably get a sell off near the 1 on the 1 2 move, or probably the 3 4. So highest probability is we sell off at the 1 or the 3. But if we do want to stay bullish, we are going to need to come up. There's a little small fair value gap. We're going to need to invert this range, and we're going to need to invert this gap as well. So once we get above that, a 0 to 1 move should take us somewhere inside of this high, below this high, and then we would make our 1 to 2 and either stay inside of this fair value gap and invert it, and hold inside of this new week opening gap to get the 2-3 move that takes us above this high and probably these highs right here. And then that gets us back into the upper quadrant around 98.034. If we do come here and we don't get to sell off at the 1 or the 3-4 retracement pulls us back down. Worst case scenario, we come down into the back into the inverted. This would be an inverted fair value gap at that point, and maybe likely even coming down into the new week opening gap. And then we could likely see, a 3-4 low somewhere around this area. And let me just put it on the chart. There's our fair value gap to the downside for right now. We don't really need it at the moment, so I'm just gonna box it off because it's not in play yet. But this would need to get inverted. You can see price trade above it, hold inside, push up higher. We could come back down at this point. We would have swept highs. So after we sweep highs, we might see price retrace back into this or this and then bounce for the 4-5 move higher. The 4-5 will likely take us to tap the yearly. The 3 could do it as well. 3 could do it as well. So 3 could tap anywhere from this area up to the yearly opening price up to this daily fair value gap high. And primarily looking for the 4-5 to happen right there as well. So, all right, that makes sense.
Yep.
Makes sense. Okay. Here's dollar. I'm gonna try to rush through this a little faster. Here is gold. Gold been ranging. But gold again, right now we're inside of this 0 to 1 swing right here. We're gonna need to invert this to go higher. So our 0 to 1 should actually take us above this. And you see we got another little fair value gap right here. This is happening at what is this? This is a price gap to the downside that we're inside of right now. I don't know why it ain't labeled, but this is a bearish price gap. Where we at? Right here. Okay, so we're inside of this bearish price gap right now. Let me flip it. And I don't want the background on this. Right, so we're right in the middle of this bearish price gap. And we've traded through this price gap already on both sides, right? So this could be bullish or bearish already. So we gapped to the downside already. Let me see. Wale, type me what you. Hey, after you're done. Oh, yeah. So we gapped to the downside on this initially. No, I'm sorry. We gapped to the upside. Then we gapped to, no, I don't remember. Let me look at the daily. Yeah. Okay. So we gapped to the upside right here. That's this gap. Then we traded through it. And right now, this is a neutral gap, right? This could go either way. But right now, it's using it to buy up, right? So let me flip this. This is bullish. Then let's get rid of the shading. So this is actually bullish, but it's neutral now. So it could be bullish or bearish, but because it's neutralized, right? But it is an area of importance, and you can see that we've been trading off of it, right? But anyway, there's a bearish fair value gap that if we're gonna sell off, if we're gonna push higher, we need to go ahead and invert this, right? So our 0 to 1 should take us through and above this, which will likely take us through and above yesterday's high. There's another one right here that may come into play, may or may not. But either case, if we take this high, we likely use this as a catalyst to go higher for our 2-3 move. Our 2-3 move should take us above this high and into this a 4-hour fair value gap from a few weeks ago. Now, rejection around this, right? And the reason why I'm thinking the 3 is the likely possible rejection area is because we've been ranging all this week. A 3 would just expand the range further, but we still stay primarily in the range if we're going to keep ranging on gold. But who's to say what it's going to do, right? We could just shoot up, right? And so high probability is the 3 and the 5 on this for the rejection, right? Because if we do push higher, I don't think we get a rejection until after we make a new high for the week and after we get into this 4-hour fair value gap. So, um, and then the 3-4 leg, like that could push down back into this fair value gap, or at least into this one as well, because they kind of overlapping. So that's where I'm thinking the 3-4 push down to. It could do worse, it could do less. We don't know, but those are high probability areas for the upside. For the downside, let me see. What is this? For the downside move, if we push down, this is going to take us down to the weekly. And then that takes us to the low of this price gap. So right around 5120 area. And then the weekly is right around 5128.9 area. So that's where I'm thinking the 0 to 1 takes us. If this holds, there should be a very strong move to the downside, right? We would have swept liquidity. The 1-2 retraces near the middle, worst case scenario. And or we get a rejection to the upside from the 1. If the 2 holds, we take out the low we made for the week and we trade down near there is a little order block right here. I don't have it drawn, but it is one that actually projected where this little order block right here, well, it ain't even little, but it's the reason why this move happened to the upside. So this order block, well, let me just put it on the chart, will be at least where we try to come down to, more than likely. So that's where we get our 3 from after we sweep this low. And then this same area is also inverted fair value gap too. So this inverted fair value gap likely could be a 3 or a 5 hole. So that's where I would be looking for price to hold at the 3 or the 5. Don't have a preference of which one is higher or lower, which were higher probability, whether we hold at the 3 or the 5, because they're both within the range of this order block, even though the body is only right around here. So this is gold. But just remember, a lot of people can't trade gold right now because if you're trading prop firms, gold is restricted right now. So just keep that in mind too. Then we got the VIX. The VIX pushed down today. We were trending to the downside all night today, and we've been trending down for this whole week. So what is this, man? Why is this on my chart? Let me refresh this. All right. So VIX. No questions on gold, right? No questions on gold? No.
No.
Okay. All right, cool. Okay. So this is the weekly high on VIX. So the volume right now is dropping. Usually when volume drops, you have markets pushing up, right? So this is basically in line with where we made the low of the week for most of the indices, right? So on Tuesday at 9:30, we probably made the low on ES, NQ, and Dow, right? And then we've just been pushing up ever since, right? We got a 4-hour fair value gap sitting right here. that's above us. Today, we just kind of gradually pushed down lower. We took out this previous day low, previous week low, and then we still sitting inside of this bullish fair value gap. So there is a slight chance that we could push up, but I think that with the Nvidia news, we don't get to push up, right? Today sold off on VIX. This sold off in line with that second move to the upside. So around 11, this rejection took place that this gap at 9:30 is the key. On the 9:30 gap, we actually sold off around 10:55. That was in line with the low that we made in that late evening push late morning push around the same time, 10:55, and then we just sold off from there. So going into tomorrow, there's not a lot of bullish clauses right now. There's not a lot of bullish catalysts right now to take us higher. So if we do get the 0 to 1 to the upside, a lot of times we tend to use the gaps and really looking at this gap to probably hold shallow pull back on it. Oh, let me go back. I like it the way it was. Right. So if we get the 1 to the up, 0 to 1 to the upside, I think we trade into this is actually some like another little order block. I mean, fair value gap right here on the 4 hour. You got another one right here, and gonna be looking for us to make the one inside of there somewhere, and then come back and try to hold near this 9:30 gap in the middle of this fair value gap. Pushes to the upside. We trade above these little highs right here, and then somewhere back into the 4 hour fair value gap if we come back up, where we could likely sell off probably near the monthly. Oops, let me get that back. Likely get a sell off near the monthly, and then we retrace, hold near the high of the fair value gap, and then we make our 4 or 5 up to the high. I don't see this happening. Low probability on this just because we got price pushing higher on indices right now. But for the downside, we trade through the low of the fair value gap on the high, the 1 hour fair value gap. Then we take out this liquidity and this previous week low. We get a 1-2 bounce from there. Our 2-3 bounce. If we don't run up from the 1, we come back and reject the low of this fair value gap, and now it's inverted at that point. So it is bullish, but it could be bearish now. And then our 2-3 takes us below this weekly low, and then we get another low right around the 3. The 3 would likely take out these swing lows from a couple weeks before. It's a previous week low. And we could get a bounce at the 3. And worst case scenario, our 3-4 bounce fails. We push down for the 4-5 move, and then the 4-5 takes us near the yearly opening price. Can't even get it all the way in the screen, but just kind of gonna try to make sure that you can get the gist of what's going on. Because those lows over here are pretty far out of place, but let me just bring it over here anyway. Equal lows. Make sense? Make sense?
Yeah.
Okay. Okay. This is VIX. VIX been spot on, man. I love trading with VIX, man. Like, it's to me, it's like the missing piece of the puzzle almost, man. I don't know about you guys, but I know everybody that I've showed the VIX to recently has been seeing a lot of success adding it on. So here's Dow. This is the first indice. We had equal highs basically here. We set our equal lows down here near the weekly low. Same time frame we said that the VIX That 9:30 Tuesday candle, it lines up with our 9 o'clock candle, which is where we got our low from on of the week, right? We gapped open today. We're pushing down, but I don't know if it's going to hold, right? So if we can continue to go down, worst case is pretty much there's a little order block right here and a fair value gap here. So we pushing down and our 0 to 1 kind of holds us right around there, right? That's what I'm looking at. From a downside perspective, worst case scenario, unless we get some kind of news catalyst that drives us lower. Then our 1-2 holds probably inside of this because at that point we'll be inverted. The 1-2 pushes us up just at or around the gap, and then we sell off from there. We take the liquidity that's here, this liquidity that's sitting right here, and after we take that liquidity, if we want to keep going lower, we probably end up on the 2-3, take that liquidity, maybe take this liquidity. There is a high order block from a few days ago, but then this area right here is a inverted fair value gap, which you can see on the 4 hour and on the 1 hour. I'm not going to draw it, but just understand that there is an inverted fair value gap pretty much covering this whole range right here. So now we know that's a bullish area. Middle of it gets us right around where our 3 is. So, and then there's also, you see this candle pattern right here? That means there's a fair value gap in between there. I think it's on the 15-minute. I'm not 100% sure, but yeah, there's one on the 15-minute right here. I think you can also see it better on the, nope, 15-minute the best. Let's check the 5-minute. I like the 15-minute the best, but there's a fair value gap here. There's a fair value gap here. And you know what we like to see with fair value gaps and inverted fair value gaps? We like to see overlap, and that becomes high probability area, right? So we not using it yet, so I'm not going to extend it, but just understand like this is probably where we get our 3 right there. And then let's go back to the 1 hour. And then our 5 comes down near the monthly. And then we see if we want to keep going from there. And that's what the downside moves. So the high probability areas for a bounce are the 3 and the 5 for the downside. Upside, we come into the back into the weekly opening price. We got these equal highs right here. Our 0 to 1 likely sweeps that. There's a little order fair value gap here. We come into, and then we get back into near this 4 hour fair value gap on the high from a few weeks ago. Our 0 to our 1 to 2 pushes us back down into weekly. We hold. Our 2-3 takes us above this high, and then our 3-4 could be where we see a sell off on the 3-4 or the 4-5 move swing, and then the 4-5 actually might want to use this little fair value gap to go higher. Small, but it could be used. So I would keep an eye on that. So that's where I'm looking at the 4-5 move to happen. Worst case scenario, 4-5 takes us to the midweek opening gap. So this is Dow. No, yeah, this is Dow. This is Dow. And then we got stuff for last 2. Not gonna go in that same details, but let's go. What are we doing? Oops. Hmm. Why this thing on? We're not coming up.
Yeah, sometimes
Yeah.
it happens with me also.
Yeah. Like
Mm.
what? Okay. All right. Got it. It's
Mm.
weird. All right. So in Q, it's basically the same situation. We can bring him down. Yeah, I'll bring him down here. We've already started 0 to 1. We gap down to the downside. Um, and once we gap down to the downside, I just want to show you one more thing. I don't want to go too crazy into detail, but it just go to show you sometimes, like even though you have the stuff mapped out, like the way price look, you might not respond to it the right way. Like I would have wanted to take this buy from the 3, which is where we bought from, right? We bought from the 3 area pretty much. When it all boiled down to it on ES, right? But so 3 was right around 68.30, right? Let me look at NQ. NQ since we got that chart open. This was our projections from Sunday when we got on that I was doing this from my phone, which was horrible experience, by the way. Our low was here. The low was 24,694. Our projection on this was to either bounce from 3 or to 5. And we bounced from 24,694. Our projection was that we would probably make the 3 right around here, which was 24,697, right? So we already had the idea that this is where we could get the bounce from, right? It was going to be either the 3 or the 5. But this go to show you, like, you can have it mapped out, but if price don't react the way you want it to, you can still miss out on the trade, right? So that's something that I want y'all to keep in mind, right? Like everything got to be lined up just to take the setup, right? So you can have everything mapped out, which is good for you, and your knowledge and your understanding of the charts. But if price don't give you the entry the way you need it, or you got a catalyst that looks like it could take you out of, rotation with how you think everything is going to play out, you can still end up missing the trade. So a lot of times I might have the whole move lined up, but if I don't get the confirmations that I need to see, like, hey, this has done this has done this, the news said something different, right? Then I won't take it because everything is in line. And it's not me waiting for perfection or nothing like that. It's just for me to meet all of the requirements and stay within my system. Everything that I need to see needs to at least check majority of the boxes, right? So in this case, we got our 0 to 1 coming down into this little fair value gap. And we hold it in here somewhere. This is bullish. I don't want to extend this out, but just know there's a fair value gap right here, which is why I'm expecting the 1 to happen down here somewhere. If we get the 1 to 2 retracement, worst case, we come into the inverted into this new day opening gap that because we gap down on the open. I think there's a high probability we get the bounce at the 1 or the 3, right? Then if we do sell off at the 2 takes us um 2, 3 takes us below this gap and back down into the new week opening gap for the most part. Oops. I think we got a strong bullish catalyst. So the 2, 3 move, I think we get the highest probability at the 1 or the 3 in this case. All right. And then if we get down to the 2-3 move, we could go as low as the weekly and then bounce. The 3-4 takes us into a fair value gap that should be formed in between this 2-3. And then if we don't get the bounce right here, the 4-5 move takes us below this low we made right here and this low and down into likely this inverted fair value gap, which I don't have drawn on there, but just know is there. I'm not going to extend it out until we get closer to it, but just know it's there. There's also on this candle, these two candles right here, there's a bullish fair value gap around this area too. I don't know what time frame it's on, but if you want to see, we can go through and look. Looks like 15 minute. Yep, right here. So there's your overlap right there on this candle on the 15 minute. So on the upside, if we do push higher, that means that we would have come up from this low where we make the one. We still should probably reject around the one for our 0 to 1 move. Our retracement 1 to 2 takes us back into this gap that we made and we hold. We have the yearly opening price inside of there, so that would mean that we would be bullish for the year at that point, and then we would need to look for price to hold around there for the 2-3 move to go higher. And the 2-3 move should take us within this 4-hour fair value gap. We don't get a rejection until we get to the middle to upper quadrant, which is right around this midpoint. Let me put that on there. Right? Our 3 rejects somewhere around the middle to the upper quadrant. Our 3-4 holes around the lower quadrant and the yearly, and then we get our 4-5 to take us higher into the fair value gap. Highest probability rejection we get is the 3 or the 5 on this, but that's what I would be looking for this one. That makes sense, right? Tracking?
Yeah, tracking.
Okay. And then this is NAS, and then here's our last one, S&P. Sorry, this went a little longer than expected. Same situation on the 1 hour on ES. Similar situation, just different layouts. There's our inverted fair value gap near our low. So from a downside perspective, this is where I'm looking for us to come down to. Highest probability we get rejection. There's that same area right here. This 2 candle combination means that there is a fair value gap that's inside of this range somewhere. So that's where I would be looking for the 5. This is highest probability, 5 or the 3 on this one. We would have the 3 would have us coming down near the yearly opening and near this new week opening gap. So our 0 to 1 takes us near the monthly. That's why I'm looking at the monthly as being our area to bounce. We could also come down to the new week opening gap. So if we get a 1-2 retracement on this, it holds near the high it is, and then we sell off to get our 2-3 move down. 3-4 takes us back to the middle of this order block. If we don't bounce from the 3-4, our 4-5 move rejects the monthly, takes us below the yearly down into this inverted fair value gap range. The upside move, 0 to 1. At this point, 0 to 1 would need to come after on the 1 bounce. And then we would need to see our high from yesterday get taken out, and then this high over here get taken out. Then we could see price pushing back down into whatever the fair value gap is that we make to take this high out. Our 1-2 get a slight retracement, Our 2-3 takes out these highs that we made here. And then our 3-4 retracement fails to make a high, fails to continue just below the all-time high. And then we get the rejection to take us back down. Highest probability in this case is the 3 and the 5, because usually a lot of times when we take a high, we do get a rejection. But in this case, if we do trade above this, because we've been balling up in all this, we've been kind of consolidating so much, this could just take us all the way up to like 7,090 area. And you know what we say about that area. It's a high probability that that's what we track into. So that makes sense on
Yeah. So
ES.
what is your daily bias?
Right now I'm
Me too.
bullish slightly because of Nvidia.
Mm-hmm.
I see a catalyst for us to sell off, but I think that what the news we just got on Nvidia will take us higher.
Okay.
Yeah. Yep. I definitely see why we could sell off, but it's like um it's just not enough. We would have to get some bad numbers on economic data somewhere to kind of get that to play out any further, you know.
Okay.
But and then the last thing I'll say, just keep that 3 drive pattern in the back of your mind. You know, if you see us do an impulse in one direction, like we just did from this low to this high, start thinking 3 drive pattern, right? On any time frame, start anytime you see an impulse in a given direction, start thinking 3 drive, right? And then when you do that and it's in line with your bias, go ahead and see if it starts to meet the conditions that you need. Okay.
Okay.
Yes, yes.
And I'll send it to y'all. Just message me. When I get done recording, I will put this on my YouTube, but it'll be private. So you'll have to save the link for this if you want to keep this session. Okay?
Yeah, put that title something like a 3D pattern thing, something like midweek
Yep.
view with 3D pattern.
Yep.
Mm.
Yep. I'll just call it 3D pattern. I like
Y-
that.
Yeah,
I
so
like it.
that will be easy to find.
Yep.
Mhm.
Yep. I will call it the 3D pattern.
Mhm.
3DP. 3D
Yeah.
pattern.
Yeah.
All right. All right. Cool beans. Okay, y'all. Well, on that note, on that note, I think that we can call it a night. And when you hear the music playing, you know that's the end of the session, guys. Holla at y'all on Sunday.
All
Mhm.
right. See you Sunday.
Okay.
Good night.
Good
All
night.
right, good night. Good night, everybody.